on a long-term chart, it's certainly an uptrend. So long-term is still super bullish. So you can see a very clear uptrend. So high, 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 low throughout and within this up channel. And second, there is a interesting thing. So first, we hit the channel overbought or the trend line overbought. So this is the overbought trend line. So especially in the past 3 events, so whenever we hit the overbought condition or at the trend line, we see that there is a reaction, another reaction, and the third reaction. You can see that the reaction is getting bigger and bigger. So this is the 4th time that the crude oil actually hit the overbought line. So first, it actually hits maybe 1 or maybe 2 weeks or 3 weeks ago. So I think I pointed this, say maybe there is a weakness showing. But second, we got a top forming here at about 96. So that actually coincides with the upthrust. So this is a false breakout, or you call it upthrust with the Wyckoff term. And if we just zoom in a little bit here, okay, so we can see that actually the supply is not very much, not that threatening, at least, although it's increasing, we can say it's quite consistent, quite high, quite consistent. Certainly is not as much as this sort of the supply, and also probably is in line with this sort of the supply at the top, and maybe slightly less than here. Okay, and I think it makes perfect sense to stay bullish in crude oil because of a lot of things happening, especially the Russia-Ukraine event and other things as well. And especially I think the supply, the actual supply is actually quite limited as well. So there is a fundamental driven event under for the crude oil. But if you just take a look at this, there is a overbought of the trend line, and also this is upthrust. And subsequently, we got a bit of the weakness. So this is like a sign of weakness. However, despite we have all these conditions, so these are the sort of like the bearish type of the condition, we still need the price to actually show us the confirmation. So these are all the conditions. So with this condition, I think that if it just break below, like sort of have the bearish bar on a Friday, that should probably have a decent change of character or the pullback. The first level that I'm watching is definitely at about 85, followed by 80, and then eventually the 75 or 76 around there. So that will be the support that I'm looking at. You can see that on Friday there is a attempt to break down. So attempt to break down, and we see that there is an increasing of the volume, but eventually it just closed as a hammer. So there's a demand tail, suggested there's a buying behind, there's a presence of demand to push the price up. I think one of the fundamental driven behind the bearish condition or the bearish news for the crude oil is actually the Iran nuclear deal. So I haven't actually dived into the details behind the Iran nuclear deal, but I think that should be the event that actually drive down the crude oil, or at least the crude oil price could just cap at this level, maybe the range, because even though we have, maybe if you want to say this is a buying climax, automatic reaction, secondary test, but some of the time we probably won't get the exact textbook style of the Wyckoff labeling like A, B, C, D. So if you really want, this is certainly still in phase A. But sometimes you can see that like previous time, like here, there is probably a change of character here, and then a weakness followed by a LPSY, and then eventually just collapse. So right now, this is a very important support level, like about 88. So if it can hold here, I think crude oil should have at least consolidate within the trading range at about 88 to maybe 92, 95. So these are the trading range for crude oil at the moment. So the reason that I'm getting bearish is definitely first is channel overbought. Second is there's a kind of upthrust. Third is definitely there is a sign of weakness. And if you dive into like the hourly time frame, I think is even clearer. So in this hourly time frame, you can definitely see that there's a localized distribution. So there's a change of character, overbought, and we got a uptrust. So this is the uptrust, and that is the localized distribution that I'm talking about. So there's a localized distribution, break below. So this is sort of like a sign of weakness. So there's a weakness with some gap down action, and eventually look at the rally. It's very weak. So if it failed to commit above 91, so 91 is quite an important level in order to violate my bearish view. I think that it should really break down and maybe have a pullback to at least about 85, and then we can judge a character and to determine whether there will be further downside ahead. So the next level will be definitely 80 and 70, 76, somewhere around there. So it's quite obvious. It's nothing magical about the level. So this is a axis line 85. 80 is sort of like this level, round number, and the other level is about 75. So these are the three levels I'm watching. But first, definitely 88 is a very important level. Okay, hopefully you see my logic behind. But until it happens, it's still a bullish trend, and also definitely I think it should attempt to rally because of Friday's price action. There's demand come in. All right. So that's my view for crude oil. And in terms of the fundamental, I don't really want to repeat. You just look at the paper and you will see that there are a lot of the very good reason to justify the very bullish oil price. And I think in long term, probably this year, it should reach about 100. But short term, I definitely think it's overbought. So it won't surprise me if it has a decent pullback after the overbought and localized distribution if it happens.